Hello, Mark Ostwald from ADM ISI. Sort this one under perhaps slightly unpopular opinions, but I'd like to talk a little bit about Russia and the Russian economy today, leaving aside any considerations of the alleged political interference that there is at the moment. This is really just about the Russian economy and whether it might be one of the ones which might surprise us in the developing world. The Russian government has announced a very substantial investment program, infrastructure investment program, which requires a lot of attention. Its success will depend, obviously, very much on on whether, as has happened before, whether the oligarchs get hold of the payments for the infrastructure projects and waste them, or whether it's actually far more efficient than previous such incentives have been. But let's have a look at the Russian economy in the first place. First of all, here's a chart of the Russian ruble versus oil prices. Now, one big difference that we've seen of late is in contrast to 2014, 2015, where the ruble took a huge tumble on the oil price, and it also boosted inflation. This time around, what we're seeing is enormous amounts of stability. Part of that is predicated by the fact that now, in contrast to, say, 1997-98, when Russia defaulted on its debt, Russia actually has more FX reserves than it does have external liabilities. And part of that is because it's been turning its attention further and further east. But what it really underlines is there's far greater stability in the ruble nowadays and far less sensitivity to oil prices, which shows that perhaps Russian economy is gradually edging away from just being another petro economy. If we move on to the next chart, we can also see that the efforts of Russian Central Bank Governor Elvira Nabiullina, probably one of the finest central bankers in the world, to create a credible inflation target have been inordinately successful over the past 3 to 4 years. And as much as there is an uptick this year due to the increase in VAT, that's still not likely to see inflation rising to the sort of levels that we saw back in 2015 when it hit a high of 16% on the back of the big Russian ruble devaluation. And certainly stability in the ruble will help that. If we move on, obviously the big question is whether Russia can attain the sort of levels of growth that it was actually seeing pre the global financial crisis, and particularly in a scenario where Western investors are obviously extraordinarily wary, apart from anything else due to sanctions, of investing in Russia. So the question now is this infrastructure program going to be successful? What we know about infrastructure investment programs is they can be inordinately successful. So the likes of China and Azerbaijan saw infrastructure investment of about 2.3, 2.5 to 3.5% in the 1995-2016 period, for growth rates in the 8 to 9% area. In Russia, growth has been very, very weak, but with the help of what is going to be a 27 trillion ruble program over 6 years, which is equivalent to $400 billion, it is hoped that we will start to see a big pickup. Above all, the projections are already showing that we're looking for GDP to pick up to 2% this year and 3.1% in 2021. If the investment program gets traction, then this should go further. And obviously, it should also show up in my final chart in gross fixed capital formation, which, as one can see, prior to the global financial crash, was growing at a very solid 15 to 20% in most years, but has tailed off and has even contracted very sharply in many of the years since. So this investment program is very important. And I think the other thing which is important to note is just how successful Russian agriculture has been in getting over the sanctions which were imposed after the annexation of the Crimea. It has reinvented itself, and if that is an example of how the infrastructure investment program is going to work, then that actually bodes quite well, and we should probably be taking investment in Russia a little more seriously despite our wariness.